What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock, and we're also going to be covering the overall market. And we have a lot of good news to talk about and also a lot of bad news to talk about. And as we can see today, opening up on Tuesday, technology sector has been hit drastically. We are off of the COVID headlines. The COVID headlines have just been removed from the market. We are heavily focused on that inflation headline and those Fed rate hikes, and that continues to bring down that NASDAQ. So that is simply why all technology stocks continue to get hammered. Now, guys, I want to be completely honest. The truth is SoFi is a heavily focused retail stock slash meme stock, just because of that, charter headline, the past 6 months that has, been continuously pumped on Wall Street bets. The YouTube channels have grown from anywhere from 10 to 15 YouTube channels covering SoFi now to 30 to 50. Remember, guys, I was one of the first YouTubers covering the stock, over 8 months ago. And the YouTube channels have now jumped anywhere from 50 or higher. So retail continues to get inside of this stock, and they don't have any conviction or know why they're buying this stock. And that's why we're seeing aggressive selling on top of shorting. It's just a double whammy you don't want to have. And that's why we're having a nasty day today with an 8% drop, because this is a retail, meme stock category, because, the publicity has gotten out there, everyone looking for a get rich quick, in just a couple of weeks. So if you find any of this information useful, be sure to subscribe to the channel. Let's try and get the channel past 10,000 subscribers. Be sure to smash the like button and drop a comment if you're loading up on SoFi at these levels. Let's get into the video. All right, guys, we can see right here, every single index is down besides oil. Specifically that NASDAQ 2.25. SoFi is down 7% right now. It was down as low as 8% at one point. This is actually one of the hardest hit stocks in the entire market. We can see the market cap has dropped under 10 billion. We're at the lowest levels from like 14 months ago when the SPAC was announced. I think immediately the stock went to $12. So we are at 14-month lows on the SoFi stock right now. So these are insane levels. Think about all the value that SoFi has built into the company, the past year, adding, anywhere from, 2 million members, also partnering with Pagaya, expanding Galileo to 90 million accounts. Just think about all the things SoFi has done in the past 14 months to bring the stock back to all-time lows. And once again, that NASDAQ is what is really hammering this market. I mean, we were down like 2.5 at one point today. If you look at the 6-month chart, I mean, we scroll down, we're near 10% correction again inside of the NASDAQ. The S&P 500 is also starting to correct. I think it's at 5% now. So NASDAQ is really getting hit because of inflation fears, just compressing those tech valuations. And we take a look at the Russell 2000 small caps, guys. I am not buying any small cap under 2 billion. Nada. I will not touch these in this market right now. This is absolutely insane. If we look, the Russell 2000 has corrected 14%, the past 2-3 months. So this is absolutely insane. I mean, there's been no gains in 6 months, no gains in 1 year. This is an index, guys. So small caps are high risk. I think Jeremy at Financial Education is in like 5 to 10 small caps right now, so he's going all in. I just don't see the strength yet. I'd rather buy like a mid cap, with a little bit higher market cap. SoFi right around 9 to 10 billion right now is, much stronger than those type of small caps that have lost 90% of value in, as little as a couple months. Goldman Sachs just reported their earnings, guys, and they really threw us under the bus, guys. I mean, I really think today was a psychology factor that, provided all of that aggressive selling today. I'm going to show you exactly what I'm talking about, okay? As we can see, this is the Goldman Sachs investor presentation. If we scroll down, all we got to do is go to page 3, and we look at net revenues right here. We have the Q4 2021 versus the Q4 2020, and we can see right here, revenues grew 8%. So I just did a video 2 days ago going over, what the hell is it? Morgan Stanley. So I just did a video a couple of days ago. Damn, it's not Morgan Stanley. Chase, JP Morgan. So I just did a video a couple of days ago going over JP Morgan. They actually had 1% growth. And they said these Goldman Sachs earnings were really bad because of profits, expenses. So they actually grew 8%, which I think is not that bad. I mean, it's still pretty bad for a legacy company. But guys, JP Morgan grew 1%. So Goldman Sachs grew revenue way over the top compared to JP Morgan. But as you guys can see, these banks are selling off hard. You can look at Goldman Sachs right now. That stock is down 8% on, profit miss, earnings miss, and, very small growth. And there's still analysts coming on CNBC recommending these stocks to buyers right now. And as you guys can see, the tip ranks valuation for price target has compressed a little bit. I think it was at like 22 to 24 at one point. We are now at 21.33 because we have so many analysts cutting back their price targets. But guys, if we scroll down, we have this brand new lowest price target of $16. Remember, all of my videos I've been covering the stock, we've been at 8 analysts. We are now at 9 analysts, and it is very, very strange where the $16 price target came from out of nowhere. Guys, it was Goldman Sachs today, the day they reported their earnings miss and the stock's just getting hammered. They gave us the lowest price target out of all 9 analysts. Guys, this was analyst Michael NG, $16 price target today on the day Goldman Sachs missed their earnings, stock getting hammered. Why would they initiate a price target on the day their stock is getting clobbered? Guys, we dropped lower than Goldman Sachs today at one point. We were down like 8%. They were down at like 7% at one point. So we are actually getting hit more. We haven't even dropped earnings. We haven't dropped any bad news. Of course, besides, the student loans getting pushed back a little further, but we still have forward guidance, strong guidance heading into Q4, and we got absolutely clobbered today. So the gentleman that gave that price target out on, possibly the worst day for 2022 so far, he's actually a 0-star analyst ranked at 15,173 out of 15,993 analysts. So he has absolutely no credibility at all. Any of his price targets he's done, the past 3 years, nothing has hit and nothing has, gone to his upside that he has predicted. So I think Goldman Sachs just, gave this guy a bonus, told him, throw this nasty little price target out, to keep SoFi from, gaining attention and gaining attraction while banks are absolutely flopping right now. So banks are flopping, guys, and, SoFi is expecting accelerating growth, potentially the highest user member growth ever. We could be seeing 400 to 500,000 users because we had that full 3 months of NFL marketing. So I think banks know something is happening right now. There is a shift, an inflection point, and fintechs are really taking market share quick. Dozens of fintechs. I mean, we're talking PayPal, Square. These companies are coming after these banks. So we have a 0-star analyst at Goldman Sachs giving us the lowest price target out of, SoFi's history so far. So it's a very strange thing that happened. And guys, the stock is absolutely plummeting today, down 7%. If we just take a quick look real quick at Goldman Sachs, we can see Goldman Sachs right now is down pretty much the exact same as SoFi. They were down about 8% earlier. So this just looks like a little hit piece today. A psychology tool. We know today was going to be a nasty sell-off with that 10 years rising to all-time highs, the past year. And this was just a combination of psychology, I believe. When they saw that $16 price target, this is a heavily, retail traded stock, meme stock, all over the Wall Street bets forum, swaggy stocks. And it just looks like there's a lot of paper handlers that don't know why they were buying this stock. So I just want you guys to see the manipulation side of the market. SoFi is getting taken down with these big banks on their earnings that they missed. So guys, this is the Q3 earnings release. You have to scroll all the way down, to page 18 out of 23 just to understand the balance sheet with the assets. And if you can see right here, this is the assets. We have, cash. If we scroll down, we have liabilities and assets. Okay, we want to look at assets first. So take a look at this. Total assets right now, as of the last quarter, is $8 billion in assets. Okay, so check this out, guys. If we take a look and scroll down a little bit further, total liabilities, from last year, the same quarter, was at $5.5 billion in liabilities. That's what you don't want. This has actually dropped to $3.5 billion in liabilities. So guys, liabilities are going down and, assets are still remaining right around the same, right around $8 billion. So there's nothing better than that. Your market cap on SoFi right now, if we just take a quick look, so the market cap on SoFi is now at $9.8 billion. But if we look, the assets are at $8 billion. So guys, this is absolutely incredible. The value you're getting for this stock. I mean, you can look at a ton of other tech stocks. I went through like a Palantir and a Cloudflare. They have like, assets in the 1 to 2 billion range or something like that. So we are drastically undervalued, guys. We're trading right around 6 times our 2022 revenue right now. That's not bad for a company growing 60 to 70%, year over year. So if we just talk about the downside risk on the SoFi stock right now, guys, remember we have the highest level of inflation all time. We're in a tech correction in the Nasdaq, 10%. Downside risk, it could get ugly. We could get into the $10, $11 range. This is, a rough market we're in, but understand SoFi is poised to have a good earnings report in the next, 2 to 3 weeks. We could see member growth at all-time highs. This could be the shift we need in 2022 to finally take over these banks. We're getting shorted, of course, which is making the stock look bad. But we just looked at the last earnings. The past couple of videos, and the last earnings was solid. Near 30 to 35% growth, accelerating growth into Q4. Liabilities are going down, and we could have a profitable quarter anytime. It could be a profitable quarter this quarter or the next quarter. But for a full year, that's going to most likely happen in 2023. So I'm liking what I'm seeing. I really want to see, how the Pagaya partnership works in this next earnings report. Maybe the home loans just go through the roof and take over those student loans getting hit. But, guys, this is a tough market we're in. I've been buying a lot of SoFi stock in the $13 range. We just continue to bleed, and it really sucks. And if we look at the overall market today, I mean, there's a couple of stocks down, but we're one of the worst hit stocks today. Bed Bath & Beyond, AMC, Moderna, StoneCo, Rivian, Opendoor, Goldman Sachs, SoFi. So a lot of companies are getting hit today. We're just one of the worst sold ones today. Fubo TV, Snapchat, Cloudflare are all down 5, Marvel 5. So it's a rough day. It just looks like, that price target of $16 really brought us down, just a psychology factor at the beginning of the morning. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Guys, I completely understand. So many small caps, so many SPAC stocks have absolutely got bashed to smithereens. But, we do have 2 earnings reports on the table with SoFi, and they were solid, showing revenue growth increasing, liabilities going down, and accelerating growth into Q4. That's what you want to see. You want to see continued momentum for a growth stock, and it looks like SoFi is just getting warmed up. Of course, that bank charter has really thrown the stock off because it's not here. There's delays, there's lawsuits, and that's really what, killed the stock and put it inside of that meme category, that Wall Street's bets category, everyone trying to get rich quick. And we are getting all of these, retail traders shaken out of the stock, which is a really good thing, for the long term. So you're going to need a lot of conviction to buy inside of this market. So I continue to say stick to buying every 2 weeks. You don't have to buy every Friday. Try to buy every 2 weeks inside of the market. That gives you 2 buying opportunities per month. We've already had a 2-month correction, so you could buy in the 3rd month if we have a total of 3 months correction, inside of the Nasdaq. But understand, growth will always prevail. We could see the value stocks, the banks are flopping, and they're still recommending these on CNBC. They're telling you to still buy banks after a 1% growth, for Chase, and then a 7 to 8% growth for Goldman Sachs. So guys, this is absolutely incredible to me that they're still recommending these value stocks when, growth is going to win in the future because we are disrupting that legacy market. Once again, my name is Kyle. I hope you have a great day.